Infrastructure was the focus of discussion at the Belt and Road Summit 2017. Collaboration, financing, investment opportunities and challenges emerging from infrastructure developments along the Belt and Road were explored in different sessions and breakout forums. Ram Mahidhara, Chief Investment Officer of the International Finance Corporation, spoke at the Capturing Infrastructure Investments and Financing Opportunities Through Hong Kong breakout forum. He believes the Belt and Road Initiative is boosting investor confidence in regards to infrastructure projects in the Belt and Road region.
The IFC is the world's largest private sector organization. We work only in emerging markets, only in the private sector, and we work in three broad areas when we invest. It's financial markets, it's manufacturing and agribusiness, and it is infrastructure. We have some basic fundamental criteria of whether the project is sustainable. If we've got $1 only to invest and we have two projects, each of which needs $1, and they both are commercially viable, we'll choose the one that has the higher development impact. In the last 2 to 3 years, we have done something to the tune of about $25 billion of investments in countries that fall under the Belt and Road. Myanmar is as good a country as any in Belt and Road Initiative, and we worked for a long time both on the advisory side and on the investment side to do a project called Mingyan, where we had a Singaporean entity, Sembcorp, come in as the primary sponsor. And it's a 225 megawatt project, and we are delighted that it is going to be functioning. When it's completely on the ground, it'll provide much needed power to Myanmar. In the area of power in Pakistan, we worked with China Three Gorges to set up a company called CSAIL, China South Asia Limited. The first one is the Karot hydropower project, which is I think 700 plus megawatts. And again, when it's fully implemented, it'll provide much needed power to Pakistan. So these are some examples where the projects have to be commercially viable, but beyond that, they have tremendous development impact. There's $100 trillion of institutional investors' money sitting, much of it in the West, much of the demand is in the East, right? Why is it that that money hasn't found its way to infrastructure projects? It's simple, because of risks. So you've got to have risk mitigation. We love initiatives that support infrastructure. So to the extent that governments say, this is great, we want to participate, I think they will start realizing they've got to make these changes, and I think private sector will come in.